The internet's favorite YieldMax ETF, ULTY, has had a rough week. With the share price dropping below $6, panic is setting in, and some are even calling this fund a ticking time bomb. In this video, I'll share my own $2,000 ULTY position, which I bought just 40 days ago, how it's performing, and my plan for navigating the current market volatility. This one's gonna be interesting, so let's dive in. So why was I and thousands of other investors drawn to ULTY in the first place? The same reason the YieldMax funds have exploded in popularity, those massive dividend yields. On the surface, it almost looks too good to be true. ULTY pays out weekly income, and the idea of steady cash flow is extremely appealing for anyone chasing this. But as I quickly found out, chasing high yields is not as simple as it looks. Many high yield ETFs, including YieldMax funds, struggle with something called NAV erosion. In simple terms, while you're collecting those juicy dividends, the value of your principal can also deteriorate, which means your total return might not look as good as the income on paper. I'll show you what I mean with my position a little later in the video. Now, ULTY really started exploding in popularity back in March 2025 because of its unique strategy. Instead of holding just single stocks such as MicroStrategy or Nvidia like other YieldMax funds, ULTY rotates through a basket of 20 to 30 high volatility stocks with liquid options markets. That setup allows YieldMax to run strategies like callers, call spreads, and put spreads to generate option premiums. Those premiums are then paid out to shareholders as dividends every single week. When this strategy was rolled out, ULTY traded in a pretty tight range, hovering between about $5.90 to $6.35 per share from April until August 2025. During that time, it was also consistently paying weekly dividends of about 9 to 10 cents per share, which worked out to roughly 1% per week. But here's the concern that myself and many other investors had. How would this fund hold up under different market conditions? If you look at the broader market using the S&P 500 as a benchmark, from March through most of August 2025, we've been on an upward trajectory, and that environment made it easy for ULTY strategy to look good. Now, after just 1 week of a red market, ULTY's NAV is showing signs of stress, dropping to around $5.73 per share. Investors are starting to panic, and you can see that all over the Reddit forums. But remember, even though ULTY is actively managed and constantly adjusting its holdings, it's still a very high-risk fund that can experience big swings. With that in mind, let's take a look at my own $2,000 position over the last 2 months and how it's performed. Since my last update at the 20-day mark, you'll probably notice that I've made quite a few changes to the spreadsheet, but don't worry, we'll break it all down. Let's start with the capital I've put into this position. At first, my out-of-pocket investment was about $516, which is what I showed in that first month check-in video, and honestly, I was pretty satisfied with the results at that point. Since then, I've added another $1,500 out of pocket, and on top of that, I've been rolling some of my other YieldMax dividends into ULTY to pick up more shares, which I track all in this table. So in total, my out-of-pocket investment sits at about $2,016 with an additional $215 from reinvested dividends, making my total cost basis just over $2,200. ULTY has been pretty consistent with its dividends lately, averaging around 10 cents per share, and that's added up to about $213 in total dividends so far. And if you compare that to my $2,200 contribution, that's almost a 10% return from just the dividends alone, which sounds pretty good at first. But here's the catch. Since I'm investing outside of the US, I have to pay a non-resident withholding tax before those dividends even hit my account. In my spreadsheet, I track that here as local tax, just so I can see the net dividend, which is the actual amount that I can spend. And this brings us to the next big decision, what to actually do with these dividends? This is something I see debated online all the time. Should you drip them, spend them, or reallocate them elsewhere? Personally, I've chosen to actively reallocate, and here's how it looks. My first few dividends in June, I just spent them. But since then, I've been splitting about 50-50, half back into ULTY and half into ETFs I feel more comfortable with, such as SCHD. The reason I do this is simple. It lets me pull some money out of the YieldMax circle. That way, if anything happens, I'm still building a safer reserve. So far, I've been able to take out about $107, which is about 5.3% of my principal. On the other side, about $74 has gone back into ULTY, which represents about 41% of my total dividends. Now, with that in mind, let's move into the final tables where I'll show you the performance of my principal, my dripped dividends, and the total return. So I've got 3 tables to show you. This first one strictly tracks my principal investment only, no drip dividends, no contributions from other YieldMax funds. On that cost basis, I'm down about $113 or minus 5.6%. Now let's move on to the second table, which is the principal plus all the drip and contributions from other YieldMax products. That adds another $215, bringing the total contributions up to $2,231. But even with that, I'm still down about $171 overall. In fact, out of that $215 I reinvested, I've actually eroded about $58 of it. So not looking too good so far. But here's where it gets interesting. Let's check the total return. So finally, when we put it all together, my unrealized loss on principal plus the dividends I've reinvested, I'm down about $171. Now, if we include the money I've managed to pull out of YieldMax products, which is about $107, my total return comes out negative to about $64, or roughly negative 3.2%. Not exactly the most optimal outcome, but honestly, I never expected this to be a smooth ride. My plan going forward is to stick with my strategy. I'm not going to let 1 week of volatility change my approach. I also recognize that this is a high risk position, which is why it only makes up a very small percentage of my overall portfolio. For me, ULTY is more of an experiment, a way to test the cash flow and really understand how these funds work. The next little while is going to be interesting for ULTY and all the YieldMax products as they navigate this volatility. If you want to see my next ULT update in a month or a full breakdown on all of my YieldMax positions, be sure to subscribe to the channel and let me know in the comments. Are you still holding any of these YieldMax ETFs? Or have you started moving on? And if you made it this far, thanks for watching. And just a quick reminder, this video is for entertainment purposes only and not any financial advice.